Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. And for EVE news, it's been, in my opinion, a pretty quiet week. We definitely haven't heard a lot when it comes to the development for EVE Online. We do know that the CSM elections are in full swing. Candidates are definitely active on like the forums and the subreddit and things like that. Honestly, I personally don't really hold that much importance to the CSM, although it is a pretty decently unique thing, I would say, in gaming. And so I do hope that we get the right candidates and that they can help steer CCP in the right direction. If you want to take part in all of that, definitely, take a look at all of the threads, look at all of the candidates, and then choose the ones that you like the most. Other than that, a sale happened, like a 2-for-1 for skill extractors. Not really sure how all of that is going to work out, but I noticed a thread on the subreddit mentioning that it's no longer really very profitable to have skill point farms. And the very first reaction, which I completely agree with, is that really a problem we need to solve? Skill point farms, passive extra accounts that just keep pumping SP into the game basically for free for that account owner doesn't make all that much sense to me either. But here we are. So let's just take a quick look at the New Eden store, and then we'll take a look at what's happening on the market. So we still have our Elite XIX skins front and center, some more apparel and things like that as well. And then on the services front, just have the bundle for the Omega bundle, 2000 plex, but you get some extra goodies in there as well. All right, let's dive into the market then. If I can fix this, there we go. And as always, we start with pilot services. That's coming in at 205. There we go, and let's get started here with the plex chart if we can. There we go. So we can clearly see that we had a little bit of a jolt here on the announcement that CCP was going to raise the price of subscription. Then with a little bit of a pullback. This was a little bit more sales and things like that right before FanFest, but after that straight upwards to the new equilibrium, which is well above 3.5 million. So pretty pronounced one-year high point as we now start to finally find a little bit of balance in the price of plex, and that seems to be at 3.6 to almost 3.7 million for most sellers, and then 3.5 million for the buyers. Pretty narrow margin. They definitely have to chase that supply. Doesn't change much when it comes to the Tranquility Trading Tower, and the buyers are actually the most aggressive in GDA 4.4 at the moment. Next up, the multiple pilot training certificate. Here, same trend, of course. The training certificate was in a slightly different situation because it was already since January that we had a little bit of a depressed price compared to plex, and I was on a sale where massive volumes were pumped into the market. Biggest difference, of course, like maybe 10, 20 a day are being traded for these multiple pilot training certificates. So it took a very long time to absorb all of these volumes. On the announcement, we got a big volume spike that really didn't move the needle that much on the price. But now finally at the tail end here, we're through all of that extra supply. And then the correlation between the training certificate and plex starts to take over, and the last couple of data points averages are definitely at one-year high points as well. We're selling for above 1.6 billion and buyers are well above 1.5 billion as well. Next, we've got the skill extractor. I think that'll be a little bit of a different story. Yeah, a major, well, a pretty serious pullback, although only going just below the 400 million mark here on today's daily average. But this is the CCP sale, so this is not part of the trend. Maybe a little bit of sideways movement is what we would normally expect without a CCP intervention here, just as plex is starting to slow down or stop its increased prices. I don't think we're in for cheaper stuff anytime soon. 406 million for the sellers, 394 million for the buyers. That's a very, very narrow margin. Just 12 million or something like that for something that costs 400 million is a really narrow margin. And so a little bit of a pullback, but again, it's on the CCP intervention. So what's the impact on the injectors? Here are the large scale injectors. Well, they're starting to go up as well on a one-year high point, but I do think that the 700 million is really not all all that much compared to, well, the price of plex, the price of an extractor, and then having to also get the SP in order to create a large skill injector. It's no longer that economical, which from my perspective is not a bad thing. I personally do think that the skill injectors are not a good item for the longevity of the game. I understand why they exist. I understand the economic incentive from CCP to allow something like that to exist and to keep it within the sandbox rules, since the SP that's within a large skill injector, except for the daily alpha injectors, comes from players that have earned it. But still, it is something that allows for immediate adaptation to the meta of the game, and thus it really continuously decreases the longevity of anything that really CCP adds into the game. So large scale injectors are back on the upswing. 734 million for the sellers, 700 million for the first buyer as well. Again, pretty narrow margin as the demand is chasing the supply at the moment. Small scale injectors, same story, except not at a 1 year high point just yet. That was early May when we went above 160 million. We're at 150 million pretty much for the sellers and 140 million for the first buyer. Margin opens up a little bit more quickly here though in the small scale injectors, which to me makes sense. I think the large one, the large scale injector, has a little bit of like an investment side of it as well. It's pretty large. It's a single item that costs a lot of risk, but it's made up of a skill extractor of plex, so you get that inflation hedge and then a little bit of speculation on potentially the need for a big turnover in some characters. That's why where the large skill injector really comes in handy. The small skill injector is more for daily usage, and here we actually see not that much demand. So I do think that at the moment the demand for skill points is not that high in EVE Online. Then we've got the daily alpha injectors that are, well, that feels like a sale. Let me know in the comments. I must have completely missed it, but considering the volumes here, this must be a CCP sale. And thus a CCP intervention as we once again start to play with the 50 million mark. Kind of the same pattern we saw here. September, first inkling that there's potentially a problem. The upside is back and we went above 50 million. CCP intervenes with a sale, pushes the price back down below 40 million ISK here. We touch the 50 million. We get very close yet again, and CCP comes in with another sale, driving the daily alpha injectors down to 42 million for the sellers and 36 million for the buyers. A bit more, I think, of a smaller sale. Here it's pretty obvious that was like a 1 week long sale for the daily alpha injector. Perhaps here there was like some new content or something like that that came out specifically for new players. That's always a good combination, of course. But here a little bit of a sale to basically, in my opinion, keep prices in check and allow the alpha players to have that goal of the daily alpha injector. Having to make around 40 million is quite a bit more feasible on a daily basis than 50 million. After that, we still have the hypercores left that are kind of mirroring what Plex is doing, starting to stop the increased prices. Basically, I think the market is deciding on which price point it wants for almost all of these pilot services, except of course where CCP is still intervening, but all of this following the changes to the real life prices. And one thing that's very noticeable though is how the volumes have dropped off sharply for the hypercores at 384,000 for the sellers, 350,000 almost for the first buyer. So pretty expensive stuff at the moment, of course. And for Plex, is this the right time to sell? Well, the summer slump potentially is coming as well, which can always cut on both sides, right? You can have lower supply, but if enough players stop, then you'll also see lower demand. And this is actually a right after FanFest spike, so honestly I would not be surprised if this could actually be a decent time to be selling, but I'm definitely not sure. It really kind of depends also on what CCP still plans to release or to announce before the summer slump comes into effect in EVE Online. Next up, we have the mineral market coming in at 950. There we go. Let's get started here with titanium. That you could see it on the ticker, probably starts to move sideways just below 4 ISK at this point. we are talking about in JIDA a sell price of 383, 250 million units coming in, so that's definitely again gonna keep things pretty stable. Another 430, another 500, another 500 million. So we do have ample supplies to keep us from reaching that 4 ISK. 373 for the buyers though, pretty narrow margin, decently strong demand as well. I think that we still have that Siege Green update that is starting to ripple through the basic resources of the game, showing a little bit more demand across the board, at least for the Tech 1 stuff. Then we've got Pyrite that basically climbed a little bit more and is now stalling, but is staying just below 10 ISK, which is not great, but it's almost 9 ISK at 896 for the sellers and 864 for the buyers. Again, a pretty narrow margin with buyers chasing the supplies that are available. Volumes a little bit more, reasonable, I would say, for Pyrite up until a 920 when we get 400 million units. So heading for 9 ISK is definitely possible, I think, for Pyrite, considering the volumes there. And then we get Mixalon, that is basically doing the same thing as well, went bottomed out at 50, managed to recover a little bit, and let's see if sellers and buyers are quite close to each other. 62.95 to 61 for the first buyer as well. Really narrow margin here, just 2 ISK on something that costs 60 ISK is really narrow, so there is, I think, decently strong demand for these prices. They'll be defendable for now, and I think it's gonna be interesting to see if Siege Green can indeed get nullsec to start another arms race, maybe start some wars and things like that. That could really drive up the price as well. So it's okay to sell. It's definitely not the best time to be selling, but I would be doing a little bit of a combination if I were mining in HiSec, doing a little bit of selling, but also, trying to build up some reserves for hopefully some real action. Then moving on to low-sec, here is Isogen with again a very bad chart with today's min max. That's bugging out, I think, but we're at the 350 again, and we're really hesitating for another breakout. 349 for the sellers and then 326 for the buyers. But the good news is the biggest sell order on the front page is 13 million units, and then we go to 350, and we still have to keep browsing. Another 12 million at 357. It's not completely crazy that you can get a 10 million units together, but then they start to be a little bit more structured, right? 10 round, 10 round, 10 round, 10 round. Wouldn't be surprised if that's one of those holders of Isogen that's basically testing the waters here with small volumes. 360, 363, 366, 65 in this case, 369, etc. Trying to see if he gets plenty of triggers up until a 380, where we get like another 50 million units waiting. It's definitely, I think, an interesting tactic as well to see what we can break through. And I think with these volumes, that potentially, especially again on a little bit more interest from nullsec to build more stuff than or even HiSec, maybe faction warfare. It really all depends on CCP's patching and what they decide to do here. We could be set for higher prices for Isogen, but the phase of a straight upwards momentum is clearly over here as well. We get a little bit more hesitation in the market, and we are starting to play with active supply demand a little bit more, with potentially pullbacks as well. So don't expect that that increased prices to just materialize and then to stay there forever. The market's really trying to find out, what do we have to do with Isogen? How much stuff is still out there ready to be sold at better prices? And that's all part of a healthy market. So we're definitely in a different phase for Isogen at this point. Then we've got the Noxium market that is staying, well, decently, I would say decently depressed at this point, not really able to break out or anything like that either, but it's defending 1100 ISK, so that's still, in my opinion, quite reasonable. 1076 for the sellers and well above 1000 at 1012 for the buyers. Volume wise, 5 million, couple of million. This feels quite in line with what you can bring in from lowsec, but it's not the best period for Noxium either. Again, same story. HiSec is now able to defend the current price pretty effectively. I think lowsec is able to do so as well. Isogen has the most potential. But it sort of depends on what the bigger groups, the real movers for big volumes of materials, are going to do from this point on. It's been pretty quiet. Let's see if maybe with Siege Green and with cheaper capital ships that they decide to change things up a little bit there. Then we've got Nullsec. Here is Zydrine that's breaking out. Well, another possibility, of course, is that they're starting to form cartels and that they want higher prices. Or it's also possible that the first bottleneck that they're encountering is their own minerals, which is Zydrine. So that's a possibility. But Zydrine, and you can see it from the ticker as well, well, not right now, but it's coming up, is that Megasite is up quite a lot as well, becoming the most expensive minerals once again. 1300 almost for the sellers of Zydrine, 1231 for the buyers. Super narrow margin again. Buyers chasing the supply, which is normal for a Nullsec mineral, of course. And then we've got Megasite doing the same thing. 1 year high point above 1250, 1218 now for the sellers. A little bit of selling pressure coming in, which again is a little bit more normal for Megasite as well. Has some other sources than just Nullsec. 1145 for the buyers. As a result for that, a little bit more margin as well. I love that you can see that difference very, very clearly. But let's hope that this is basically, because of need, because of the industry that is starting to move in Nullsec, which with the Siege Green update, that could be very good news for the rest of the minerals. Could be bad news for Morphite if you're looking for cheaper stuff there. Well, actually, Morphite still hovering just above the 40k. This feels like it could be an active supply-demand thing. 42,570 for the sellers, 40,000 for the buyers. Really pretty narrow margin here as well, and basically the market settling that it's 40,000 for Morphite at the moment. So we'll have to keep an eye on all of this in the upcoming weeks. On the one hand, we are of course hoping for more activity and thus potentially higher price in minerals. On the other hand, we've got to again realize, just like with the pilot services, summer is right around the corner. Potentially a first summer of freedom for a lot of people in a couple of years. I, for instance, have heard the metric on the news that 80% of my fellow Belgians are planning to go abroad, to a foreign country for the holidays, which is quite a lot, I think, but something like that can happen pretty much across the world. Except for all of the strange stuff that's happening as well. It's really unpredictable, but I would not be surprised if we see a pretty big slump in activity as well in EVE Online over the summer. Then we've got the PI market coming in at 1750. Let's take a look at this. Not expecting too much considering the minerals there, they're just holding on. So we do have a little bit more demand in my opinion, but nothing that's really breaking out or anything. And so here, for instance, for the broadcast nodes, we're heading back below 1.5 million. Yeah, supply 1.5, buyers at 1.3. That's maybe dropping off just a little bit, but it's still a pretty reasonable price for the sellers. Then we've got construction blocks that's able to defend its 9,000, but it's really struggling to do so. So sellers coming in at 9.3, buyers at 8.5, bit of margin opening up here. So that's kind of interesting as well. Maybe a first counter sign that some demand is dropping off in the PI market. For coolants, we get a slow uptick, which is pretty damn nice. We're back at 9,700 for the sellers and getting above 10,000 pretty quickly. That's really lovely. That water nerf that seems to be quite absorbable by the market, and that means that for me personally, I can try to sell some more of my coolant reserves. 8.6 for the buyers, still a pretty big margin right there, but the upswing is actually pretty nice. Enriched uranium, flat just below 10,000 ISK, sellers at 10.3, buyers at 9.6, way smaller margin here, so we don't have the impact from the water nerf in the general need for water in the industry that CCP did, and so as a result we get a much more stable and pretty, in my opinion, reasonably priced enriched uranium. You're definitely getting a decent reward for your efforts compared to a year ago, 2 years ago. This is actually a really good price for a lot of this PI stuff. Integrity response drones, like that was the biggest winner of the Siege Green patch, went above 2.5 million, is starting to lose some of its feathers though. The sellers still at around 2.5 million, buyers coming in at 2.4 million, showing that there is definitely this increased need for these integrity response drones, but the supply response seems to be pushing prices back down at least a little bit. Mechanical parts went above 10,000 disc, is back below that, still 10,140 for the sellers, 9.5 for the buyers, healthy margin, strong demand. I would say this is very reasonable and a pretty damn good price for something that's so easy to produce. Barren planets, they're basically everywhere. Miniature electronics are pretty stable at 10,000 ISK as well, 9.5 for the buyers. That's the same story in my opinion, really still pretty strong demand. I'm surprised it's not dropping off that much, except for the advanced PI materials. Here again, nano factories dropping off a little bit again as well, heading for 750 on the chart, 825 for the sellers, 790 for the buyers, but pretty obviously suffering a little bit from pressure. Organic mortar applicators, same story in the last week or so, went well above 700,000 disc and is heading back below that. 630 to 560 is actually a pretty sharp drop off. Recursive computing module, advanced PI material, again same story, now below 1 million ISK, 950 to 764. So it's clearly in advanced PI materials that things are not going entirely to plan. If you're looking for, you know, massive production all of a sudden in perhaps another arms race in nullsec, this does seem to indicate that, well, there was a little bit of an initial rush, but they're holding back at the moment, or there just isn't that much demand for it. Robotics 70k, we know that that's apparently the new price range for specialized PI materials. It's still 30% below what my historical reference is, around 100,000 disc. So margin 67 to 70,000 though is pretty narrow. Rocket fuel well above 10,000 disc, 11 in fact for the sellers and 10 for the buyers, a very good price here. Self-harmonizing power cores, another one that did pretty well on the Siege Green update, went well above 2 million, actually touched 2.5 million. And is starting to fall back a little bit. Sellers at 2 million, buyers at 1.8 million. It's still a pretty great price though. Smart fab units, specialized, that are dropping back off. So definitely had a couple of good months. 70k came back into play, but now 57 to 46, unfortunately dropping off here. Sterile conduits continuing to drop off below 1 million, almost 900,000 to 836. Supercomputers for specialized, 75k, we get an exception here, 84,000 for the sellers, 70,000 for the buyers. So what's the difference here? We're basically lacking supplies of supercomputers, pushing the price up above 80,000 disc, but what's quite noticeable is the buyers are well aware that supplies are underway, considering the other parts of PI where we do see pressure. You know, it's quite normal that you'll maybe move a little bit less of some of these advanced PI materials and then try to move some supercomputers. That supply gap will be plugged, and thus we'll find ourselves back on that normal 70k range pretty quickly. There is no need for these buyers to move at all. Then we've got synthetic oil, that's pretty high at 9,000 disc. On the 1 year chart it's high, 9.4 to 9,000, narrow margin, decent demand yet again. Then we've got synthetic fiber, 75k, tied to implants. But let's see where the buyers are at. Well, they dropped off below 75,000 disc. Honestly, I would say if you want to be ready for another implant shock, like right here in December and here in April, you could try to buy your synapses below 75,000 disc. I think it's not a bad place to start some of those reserves. Then we've got transcranial microcontrollers landing on 75,000, with again buyers below 75,000. Bump in January is not, December, January, not that noticeable, but in April it is quite noticeable. 100,000 here, 25%. It's a possibility. Obviously, the synthetic synapses looks a little bit more juicy, in my opinion. Then we got water-cooled CPU, which is refined, and that's still struggling quite heavily, 5.5 to 5.1, so definitely one of the cheapest ones there. And finally, wetware mainframes can't really bug the trend. Advanced PI materials dropping off to 1.5 million. Almost 1.6 for most sellers, 1.4 million for the buyers. So PI is a little bit more of a mixed picture, with the more basic products like coolants, mechanical parts, construction blocks doing really well, 10,000 disc coming back into play, but the more complex stuff, advanced PI materials, apparently dropping off a little bit, I think on not as much demand as was expected. Then we have our advanced moon materials coming in at 25.15. First quick drink though. Summertime, so it's a little bit hotter. There we go. Let's get started with the carbonites that basically gained a little bit last week, but that's interesting. What I was fearing is definitely materializing here for crystalline carbonite for Galente production. These higher prices are immediately being met with more supplies, and thus we are already on our way back down. 115 for the sellers, 110 for the buyers, and so you can clearly see that we gained a little bit last week, and then supplies are coming in response. I think this was in all carbonites that we gained in price from basically a bottom of around 100 ISK. So let's see for Caldari what's next here. Titanium carbide, all right, holding on a little bit better below 150, so the bottom here 100. We had the scenario play out in April. And then we managed to plateau a little bit at 115, and now we are at 140 almost for the sellers, 130 for the buyers. So Caldari still having that little bit of premium compared to, I think, all the others. Let's take a look at Minmatar with Fernite Carbide. Yeah, 100 ISK, basically recovered from the bottom that went below 100 ISK. But it's not really able to move much from there, 105 to 98. And then for Amar, it's tungsten carbide, jumped up above 100 and starts to show signs of pressure here as well at 110 to 109. That's a narrow margin for sure. But yeah, carbides on the 1 year chart obviously still massively depressed, and whenever it goes below 100 ISK though, you do have buyers come in that push the price back to a higher range. Then we've got our metamaterials. Galente first, that's photonic metamaterials, starts to recover as well from, well, a bottom price below 7,500 ISK at 8,150 to 8,000 ISK. That's still very, very cheap on the 1 year chart, but again crawling out of that bottom. Then we've got non-linear metamaterials for Caldari. That's, you know, a little bit more of a violent swing, went down to 10k, back up to 15k, but again the new supplies are coming in very quickly, and as a result 13,250 to 13,000 is the new range, which is, well, again on the 1 year chart a massive loss. Then we've got Minmatar, which is plasmonic metamaterials, is doing the climb now. It did touch 10,000 ISK, starts the year at 22,500. So here again we get some traders jumping in, buying up some of that relatively cheap plasmonic metamaterials, driving the price back to 15,000 for the sellers. Buyers moving quite quickly here, 14,270 as well. But again, my expectation is that new supplies will bring that price down decently quickly. And then finally, terahertz metamaterials for Amar is doing the exact same thing, touch 10,000 ISK. Here's the volumes from the traders, a little bit of a bump, but we already see the pressure back on, 11,640 to 11,280 for terahertz metamaterials. So at the moment, there are still buyers in the market. Basically, whenever carbides reach 100 and whenever terahertz metamaterials reach, well, it's either 10,000 ISK, but I think it's like 12.5 for the Caldari one. That one still has that premium attached to it, but I think we will constantly see that pressure again, and the real danger is that, just like with Tech 2 ships, we've seen on quite a few of them, that this will actually turn out to be catching a falling knife, that the new consensus price will actually be below that price range of 10,000 ISK or 100 ISK. We'll have to wait and see, of course. It all depends on basically how much stuff Nosek is actually going to start to blow up at this point. For the other advanced moon materials, fermionic condensates, also kind of same story, right? Went to 40,000 ISK, definitely a bit of a bottom. Volumes for traders recovering a little bit, but the pressure is back. So unless we see something drastically different on a chart, well, Ferrogel went below 20,000 disc. Here's the volumes, managed to push back up to 20k. Here I would say we still have a little bit of volumes pushing the price back up. Volumes are drying up, and I think supply is going to easily bring that price back down. So we're basically still in the same dynamic. Same story for Fullerite. Touched 400 disc, went back to 600. The pressure is back. Hypersynaptic fibers went below 5,000 disc, jumps to 6250, starting to see the pressure yet again. Nano transistors a little bit flat for the last 10 days. That's interesting. The pressure is really materializing there. It tried right away, but there is a little bit more buying in the market for on this one. But yeah, 2.5 buying back up to above 3k and able to stay there for now. 3,150 to 2,900 though, so we could see that pressure mount quickly. Phenolic composites, terrible chart. Let's see if I can actually get something to show on the chart. So obviously we start high at 2,000 disc, we go below 1,000 disc, we manage to get back, and we're actually still below 1,000 at the moment. Pressurized oxidizers, big volume starting to drive the price back towards 10,000 disc, but we've been here for the whole month of May, so sellers trying to get back, but look at how aggressive new supplies can be here. 9.1 for the buyers. Reinforced carbon fibers, sort of the same story, super flat here though on the price, but yeah, again went below 7.5, a little bit of volumes bringing us back, but not really able to move out of the low range. 8,400 to 7,500, starts the year at 17,500, so lost 10k over the course of the last year. All this stuff leads to that massive slump in Tech 2 ships as well, which I actually noticed a post on the subreddit as well, that everyone is sort of wondering, is this a problem that CCP wants to address as well? Ceramic fibers, 273 to 263, and started the year at 500 disc, lost almost 50% of its value as well. So advanced moon materials, a little bit of a bounce, but almost all of them from 1 year low points, and we're starting to see the first signs of new supplies bringing prices back down pretty quickly. Yet again, I don't think that we'll see much higher prices anytime soon, to be honest. Let's take a look at the impact on the Tech 2 ships then at 32.25. There we go. Oh, I'm actually having a fast one today, but let's get started. Here is the Basilisk chart, and yeah, unfortunately in a market like this, quite often it doesn't take that much time to see that the trend is basically alive and well across the board. Advanced moon materials basically doing a little bit of a bounce, but from 1 year high low points across the board. So the Tech 2 ships are finding themselves in 1 year low point territory as well. And just like with advanced moon materials, any jump up in price gets squashed very quickly by new supply, and Basilisk went above 130 million last week and is back at 125 for the sellers, 112 for the buyers. So that's definitely back on the cheap side, but who knows, this does seem to be the new level, and it could get worse if supplies keep massively depreciate the price in advanced moon materials. Cerberus, kind of the same story, except that we now have like a consensus price of around 150 that's starting to build, right? The lows are starting to get higher, the highs are starting to get lower, and we're really meeting up at that 150 range, 148 to 140 for the Cerberus. Unfortunately, in these circumstances, very difficult to actively trade any of these ships. Next we've got the Curse, also heading for 150. We're at 146 to 136. There's really not that much to say. The Damnation tried to get back to 300 million, but that is apparently too much for a Tech 2 battlecruiser at this point. Supply coming right in, driving the price back down, and the buyers, they want that 250, and quite often, you can see that here on those minimum prices, they actually get a Damnation for 250 million. 272 to 248. These guys are just not gonna budge anymore. Then we've got the Deacon that went to a 1-year low point below 15 million, climbs back out from this a little bit, but same story. Don't expect that to massively break out or anything. Buyers are at 15, 600 for the sellers. Next we get the Eagle, so that's another cruiser, goes back to 150. I think cruisers could settle down mostly around the 150, but then supply here 157 for 130. I think supply will very quickly catch up here again, drive the price back down. You know, breaking out to 200 million or anything like that, I don't see that on the books anytime soon. EOS for the battle cruiser tried to get back to 400 million ISK, but got squashed very quickly, and we're once again right 250 for the buyers, well below 300 million for the sellers, 280 to 241. The Ares is a destroyer, went to 37,500 and is back above 50 million. All right, 53 for the sellers, 40 million for the buyers. And this is then the one trend if you are looking to actively trade in Tech 2 ships. The small ones do sometimes seem to have enough volatility for trades. If you bought, let's say here at 38 million or down here at probably 40-ish million, let's see if I can get it to show. Yeah, 40 million. Then yeah, right now you get a sale at 53. You've got a profit in the trade. But be very careful, of course. The general trend is still oversupplied in Tech 2, but I think that the small ships do have potentially the volumes and the volatility to get some trades going. I kind of like the stealth bombers myself, but these interdictors sometimes are doing really well as well. Like here, the Flycatcher that managed to make its way to 70 million in April. Probably by far the most expensive Tech 2 destroyer that you could get, but then the response, of course, is massive supply, and now we're at 40 million, where for now it's not really able to move from that range, 42 to 39 million. The Guardian slumped below 130, coming back a little bit from that, but yeah, let's remember 130, 144 to 117. Yeah, I think this will again unfortunately get squashed very quickly, just like the previous spike, up to 150. And then the worst news is, of course, that these high points keep getting lower and lower as the market starts to find a consensus price for, well, this is the new era for Tech 2 at the moment. It's super cheap. Then we got the Heretic, another interdictor, went above 40 million, but this one is lower volumes at 25 a day, so less volatility, 36 million to 31 million. Super cheap as well, of course, compared to, what was it, the EOS? No, the Ares then. Yeah, the Ares above 50, and then you get that Heretic less than 40. The Hound, let's see here, trying to get back to 20 million on the high point, and then here on the low point below 15 million again, 20 for the sellers, 16 for the buyers. But just about 10 days ago you could probably have bought these for 14 million. There's a bit of a trade to be had in this one as well. Ichthyrsa for the Triglavians, way more stable, of course. It's a different side of the economy than just the advanced WOMADs on that one. At the moment, pretty cheap, I would say, 590 to 535. Then we've got the Ishtar, not able to get back to 150. Super popular, big volumes. I think this one will really have problems. Just because of how popular it is. I think it's got plenty of producers to keep things in check. 134 million to 131 million. Then we've got the Kirin, that's landing on 15 million for a logistics frigate. Very nice little landing. Minimum prices now at, well, below 50. So are the sellers. Might as well just pick one up from here if you want to get in on that potential Kirin trade. The bad news though, the daily volumes are pretty low, so this one gonna be difficult to actually get those spikes going. Stealth bombers, better volumes around the end of the day. You can see here landed on 15, went above 20. On its way back down, sellers at 19 million, buyers at 16.5, a little bit too early. Let's get those buyers below 15, then I would jump back in for a Manticore or two. Nemesis currently going back down substantially below 15 million as well. Below 15 for the sellers, below 13 million for the buyers. And volume wise, yeah, not that great, but actually slightly growing. So again, if you want to take a gamble, yeah, Nemesis might just be the ticket. Nighthawk back at a 1-year low point, 300 million for a command ship for a battle cruiser. Just seems to be the range. Then we've got the Olneros. Went below 100 million, 109 now to 102. Not much to say there. Purifier, unfortunately, a little bit too stable. Can we still buy these below 15 million? No, so we're just too late, right? Last week or 10 days ago, could have bought these below 15 million ISK. But potentially we'll see in the next week or so. If there's one thing that's like easy to then grab, make a fleet of it, just YOLO it in nullsec, it would be stealth bombers. So I kind of think that some of these could be in the right buy range, or that you could have bought them when they were below like 15 million. Then we've got the Rook continuing the slow descent. It's a cruiser, 124 million to 115. Ouch. Then we get the Saber, another interdictor. Here we go, a little bit better again, touching 40 million, going back up, but then going down well below 40 million right here. And when touched 50 million yet again, 45 million to 41. But you can, in my opinion, see that difference in volatility. Smaller ship, it's a destroyer. 100 a day is easily done on the trades, and then you get that increased volatility. Scalpel, super stable at 16 for the sellers, 15 for the buyers. Low volumes. Scimitar touched 100 million and is finally climbing back a little bit, 140 to 117. That's almost a trade as well. Then we get the Sleipnir, 1-year low point, 265 to 251, yeah, battle cruiser, 250 for the buyers, and then trying to get to 300 for those sellers, but it's very difficult for them. Vagabond is currently selling for 142, buyers at 134. And then finally the Zarmast is back at a high range. That's kind of interesting, 590 to 530. Zarmast up in price quite a decent little bit, whereas the Ikitursa actually feels low. Maybe again, if you're feeling like you need to gamble with one of the more expensive ships in the game, at least for the smaller ships, then Ikitursa, buy here. Consider the Zarmast as potentially something that could happen next for the Ikitursa, as it takes in more demand for materials, for production. Zarmast could have an impact on the Ikitursa price. We'll see if something like that is possible in the upcoming weeks, I think. But for Tech 2 right now, well, it looks like the interdictors actually have most volatility. I personally like the stealth bombers when they're in a pronounced 1-year high point. Kind of see those ranges, right? 15 million for most, and then the Nemesis is like 12.5 or something like that, I think. Below that, you can try to buy, and I think potentially there is a little bit of trading in there. But the battle cruisers really struggling, a couple of the logistics cruisers have some swings that are tradable, but the warning there is volumes tend to be a little bit of a problem, and finding the bottom on those cruisers that go below 100 million from time to time is very, very difficult. So risky times in Tech 2 ships if you want to actively trade, but I do think there is a little bit of risk to be made in the right segments. Next up, the Tech 3 ship market of 4310. There we go, and yeah, we'll take a look at that in the extra product as well. But someone mentioned that potentially the reason for the lower supply of all of these tactical destroyers is the lack of gas that's currently being absorbed by other parts of the market. So the Confessor goes up to 62.5 million, 66 million here for the sellers, 56 million for the buyers, and finally half a page of supply comes in. But let's be honest, this is not the volume that you would expect for something that is all of a sudden, I would say easily 25% above the old consensus price for the Confessor. So super expensive. There is supply, but nothing that's really gonna crash the price back down. What's the Hecate doing? The Hecate is staying above 55 million despite that swing. 56 million for the sellers, 51 for the buyers. A little bit of supply, 24 ships on 2 sell orders. That is still not a lot. So these could potentially go higher as well. Then we've got the Jackdaw, also above 55 million, 56 to 53. A little bit of supply, 9 ships in the last 24 hours. Couple sell orders a day is what's coming in. So very, very slow. To me, this does start to feel like a price above 55 million across the board is going to become a reality. And then unfortunately we saw that last week. Well, yeah, this Vapel caught up to them, but is already starting to move its way back down, 51 million to 47 million. I'll be honest, for the longer term, I would say trying to snag up a couple of these Vapels would make sense. You can clearly see that it takes like a dozen ships to get us back to 55 million. It's not a lot of supply that's crashing it down. Obviously, the usage and the popularity of this Vapel compared to the others is quite terrible. But the Confessor doing this now, and then we get these higher prices with the Hecate and the Jackdaw barely moving from a price above 55 million, I don't think buying Vapels below 50 is a bad play at this point either. The trend does really start to feel like that commenter was right, that supply for tactical destroyers is really being strangled because of something else, and as a result higher prices seem to be on the books. Popularity for this Vapel at the moment is still a bit of a problem, I think, because it's so easy and so cheap now to get a Tech 2 ship that'll be able to do pretty much the same thing pretty damn easily. Right, a Flycatcher or something like that, I think can definitely compete with this Vapel in a lot of circumstances. But if CCP decides to jump in on Tech 2, that could become the saving grace for this Vapel, and then we would be at even higher prices all of a sudden, because Confessor is super expensive, and then some cheap Vapels might just be the ticket. Who knows? It's definitely a bit of a gamble on this one, but I think it's interesting that this one is lagging behind that much, and that there is just basically no sign of the increased value for tactical destroyer, or cost for tactical destroyers stopping. Then we've got the cruisers. Here is the Legion, a little bit more of a tradable type of charts. Look at these minimum prices here below 180, so 189 to 170. Yeah, buy a Legion close to 170 if you manage to do so. It's not gonna be easy on the current chart, but if you manage to do so, I do think that you've got a pretty damn good purchase on this chart. 190, or 200 million is easily on the books. Then we've got the Loki that also is cresting, and look at those minimum prices diving straight down to 180. 200 million for the sellers, 181 for the buyers. I would love to jump in, but I would say if you can buy below 180, that's your real price, your real ticket to a good trade. But it's coming into play, I think. A little bit more supply can get us there pretty easily. Proteus, same story, also cresting. Minimum price is starting to come down, but we definitely need this one to be below 180. 200 million to 178. All right, you're buying a Proteus below 180 million at this point already. And then we've got the Tengu that's actually doing the reverse, going up well above 200 million, 213 to 196. So this one is in a sell opportunity right now. Yeah, it's really completely turned around. The destroyer market is being choked to death, and it's very difficult to make trades happen here, whereas the cruiser market has actually in my opinion become a little bit more of a predictable market with bottoms that are decently easy to call. Legions, basically a 180 million below that is a good purchase, and then you get sell opportunities 190, 200 million that do seem to come back from time to time quite easily. Very, very interesting shift in the dynamic for Tech 3 ships for sure. And let's see if we can spot the catalyst, which would be gases. So extra product 4830, let's say gas products. Like that, and then we gotta go to manufacturing materials, I believe, gas cloud materials. So it should then be, there's compressed gas as well. That's gonna be interesting. But let's see, I would expect, especially in, no, not the fullerenes, but in the boosters, some of them, we should see very high prices then. But let's quickly start with the fullerenes, see, well, if you want high prices. And is fullerenes tied to Tech 3 production? Let me know in the comments, but that would make sense. C28, 20,000 ISK, 1 year high point, super pronounced, very, very expensive. And look at the volume increase here with the Siege Green update. C32, same story, 1 year high point, 25,000 ISK, volumes not that noticeable, but definitely up. C320, highest range, not a pronounced 1 year high point, volumes are up as well. C50 was just above 7,500, starts to come back down though a little bit. C540, definitely a breakout in the last month as well, not yet at a 1 year high point, but kind of expensive. C60, very pronounced 1 year high point, went to 8,750, settling down above 6,000 ISK. C70, 1 year high point yet again, 6k on this one, so super impressive. C72 above 12,500, almost 15,000 actually is what it touched, so kind of interesting. And then another one, C84, 15,000 ISK, 3 times the price from less than a month ago, super expensive as well. So let me know if, well, maybe I can actually take a look at that industry. And then this type of stuff is then presumably needed if we keep going like that. Required for this, required for this. Oh. Required for this. Genetic safeguard filters. I've never done any of this. Enhanced neural link, which is then used for, oh, it's the large ships. And are the tactical ships in there? No. Okay, so that's for super capitals. Interesting. Okay, very interesting. Fullerenes, against my personal expectation, almost across the board, very expensive, 1 year high points, quite a lot of them, and seems to be tied to the production of super capitals. All right, booster gas clouds next. What can we spot here? Amber Cito actually breaking down below 75,000 ISK, becoming quite affordable yet again. And then we have a difference with the Miko. Yeah, the Miko is actually at a 1 year high point above 75,000 ISK. Then we get Azure Cito, quite inexpensive, but Azure Miko, 1 year high point yet again. And then I'm gonna try and do the same thing here to see if, so let's try this one. Actually, that looks like a new one. Maybe I'll take the other one. That felt like it could be Tech 3 related. So produces this, needed for, oh, that's actually booster production on this one. Okay, let's take a look at the other. So that's this, which makes this, which goes to Geo Trigger. That's also needed, I think, for, well, for faction stuff, any Tech for a lot, but definitely for faction stuff. All right, then we're gonna go the other round. I'm really curious and I kind of want my answer, so let's take a look at the Confessor and then we go for industry on this one as well. This one, where is the gas? Where is the gas on this? Maybe some of, yeah, that's fullerenes, I think. Fullerene, like the graphites, which requires, no, I need this, and then I need to grab the reaction formula. Here we go. So it's the fullerenes that are causing the problems for the tactical destroyers, but we get a similar story where Citos are very cheap, but Mikos are very expensive because they are then needed for faction ships. Very interesting. Golden Cito, actually one exception that's breaking out to 100,000 ISK, but Golden Miko went to another 1 year high point. So that's going to be the same story here again. Cito is low, Miko is definitely pretty high. Then we've got Malachite Cito is low, Malachite Miko is high again, 100,000 ISK a pop. Vermilion Cito is actually high as well. Miko is getting lower. And then, goddammit, excuse me, Viridian Miko Cito also... Miko Serafin, excuse me, also expensive at over 100,000 disc. Then we'll quickly go over some of these compressed, but that's another pretty big list. But let's see. So these are pretty new and still finding their price range. I honestly don't think that, except most of them are bound to be pretty expensive, especially the Fullerites, and then the Miko stuff is also pretty expensive. Yep, exactly. So these are following the trend quite quickly and quite closely. So I would say pretty interesting from my own perspective that gas mining obviously has a lot of value in the game as well, right? If you're a miner and you're just a high-sec miner, you're kind of in trouble at the moment. Price is quite depressed, huge amounts of supply. You've got one avenue, that is go to low-sec, try to find Isogen, try to find Noxium. Could also risk going to nullsec for some side rounds, some megaside stuff like that. But you've got another avenue, which is going into wormhole space, trying to do some gas mining as well. That actually seems to be the most lucrative at the moment. It is also, in all likeliness, by far the most risky. But that was an awesome tip. We could see right here that what's actually causing the problems for the tactile destroyers is gas itself, and it's across the board. Larger ships, faction ships are really creating huge amounts of demand for all of these gas supplies. And that means that gas miners are definitely wanted and needed across New Eden at the moment. Really cool stuff. I love how all of this is working, and it's a little bit of a sign that there is some production happening, especially those larger ships at the moment. So who knows? We'll keep a close eye on all of that, of course. That's it for this week. Thank you very much for watching and listening, and as always, I'll see you next time.